We have oil up another $2 today, but it's below 100. That's a key level. And natural gas is staying stubbornly high. All right, we have gold, silver, and copper. I'm calling a bottom for gold, guys. Is there something funny about what I said?
Oh, sorry. I was just reading something.
Oh, okay. Sorry.
I apologize.
Silver, copper. Then you have the other agricultural commodities are basically flattish. Okay, no real change there, but they're basically hovering pre-Ukraine levels. Currency-wise, dollars down against North America, down against the yen, down a little bit against the Chinese currency, euros down against the dollar, and that's really it there. Crypto rallying a little bit. What do we have? Bitcoin's up 1%, Ethereum's up 2%, Solana's up 1%. All right, and the foreign markets. This is a little surprising to me, guys, that they didn't have any kind of rally off of us. Okay, FTSE's flat, DAX is flat, CAC is flat, Nikkei was up 0.3, basically flat, China's flat, Hong Kong's flat. Okay, we have this huge rally, everything's flat. All right. So let's talk banks and Fed. All right, I'm looking for my notes from what's his face, but I'm just gonna have to go for what I said. Basically, I can't find it, so I'm just gonna wing it. Okay, let me make sure. Yeah. So anyway, basically, what he was saying in a nutshell is that the Fed is no longer behind the curve. Okay, which is surprising to me because here we are looking at inflation rates around 9%, okay? He raises rates by 75 basis points, all right? And the Fed funds rates, what, the low twos, mid twos, all right? And I don't understand how you cannot be behind the curve when you have 9% inflation and the bond is where it is. But listen, Cramer is saying the guy is no longer behind the curve, also Powell, but Cramer hasn't been right in about anything in 6 months, okay? The guy's been a total car wreck. Everything he says is basically wrong, all right? So I don't give a shit what he says. But Gundlach, he's a pretty smart guy, all right? And he knows the bond market. And if he's saying the Fed's not behind the curve anymore, then that changes a lot of things, okay? So one thing it may mean is that and the key thing here is that rates don't have a lot higher to go. Let's just assume for a minute that rates go higher, but not a whole lot higher, okay? And then you're looking at stuff in Europe and around the world, and they're much more inflationary than we have here. So I think we're seeing a peak dollar, to be honest with you, all right? And if we see a peak dollar, that changes the equation for a lot of stuff, all right? So that's why I said I think I'm calling for a bottom in gold and silver because clearly it's not an inflation hedge, okay? It's just not. It doesn't work that way. They've proven it to us. But what it is it trades with the dollar. And as far as Bitcoin is concerned, it's been trading with the dollar, but I'm not ready to say it trades with the dollar in conjunction, in a direct correlation. With gold and silver, I kind of sort of am. All right. And that goes for some of these material stocks as well. The FCXs, the AAs. I think if they're not at the bottom, I think they're close to a bottom. All right. So one thing Gundlach said that really intrigued me the most was he said this before, but he says we should do away with the Fed. Okay. We don't need the guy. His interpretation, I don't mean the guy, the institution. Their interpretation is often wrong. For instance, what he did when he clearly admitted he got it wrong when keeping his foot on the gas too long, right? And just go by the 2-year. He says the 2-year basically calls the shots. So the 2-year had gone from what 350 to what was the high 305 down to 290. It was basically telling you that maybe we're seeing peak inflation. All right, that's what the bond guys are saying. Here we got a million guys trading bonds. It trades like no other market, including the equity market. It just dwarfs it. And you got one schmuck in Washington, calling the shots. Does it make a whole lot of sense versus a gazillion guys trading bonds? I'm not so sure he's wrong. Okay. And that being the case, he's saying what he's saying. All right. That, basically this is where we should be. The optimal scenario is a mild recession. Okay. Based on the number we saw today, that's a mild recession. But I don't even consider that a recession. It's just nothing. Okay. We had 2 down quarters. Definitionally, it's a recession, but for real, come on, not really. Okay. And some people are saying we're going to have a recession next year, whatever. Maybe we will, maybe we won't. Who the hell knows? But I think the bond market is telling us we've seen peak inflation. And if we've seen peak inflation and we've had 400 on the S&Ps, what is the most likely scenario? Is there more upside in the market or is there more downside in the market? And I'm fairly neutral, okay, based upon what I'm hearing, if all these guys are right.
South Beach, your mic is all broken up. Your mic is not working right.
I think we may have lost him, guys. We'll give it a second.
Okay, let me know if you want me to jump on.
In South Beach, you there?
Yeah.
It's really like, I don't know, the connection's terrible. Not sure what's going on. I just randomly started doing this on your end.
Do you want me to do something?
South Beach, you there?
I think his mic went bad on him or something.
No, it's not his mic. It's his connection.
Oh, you think it's his internet? Okay. You want me to jump on for a few minutes?
Let's just give it a sec. South Beach, if you can hear me, may make sense. Probably makes sense to just leave Zoom and then pop back in or come back and reload it. That probably will fix the issue. If you can hear me. If you can't hear me, someone just type that out. I'm literally just typing this up myself. There we go. Let's see if this works. He's back in.
Pop back in. Does that work?
Yeah, perfect. Yeah, you're good now.
All right. Sorry, guys. So anyway, my point is this. I think I've been super bearish, that I was right. Now we had this decent rally, which I didn't foresee coming, but I did think that there would be a rally, a bear market rally. Everybody, that's no surprise, right? Okay. But if these guys are right, I would think there's a really good chance that we're at the midpoint of a range that we're going to trade in for a bit. Okay, until we figure this thing out. The downside of the range is probably, I don't know, let's call it 3,700. The upside of the range, I think, is 4,200. And you guys remember, I told you what Tepper was saying. He said, if the Fed doesn't, says we're going to be data dependent, the S&Ps are going to go up to 4,200. I told you that on Monday, right? This is what he was telling his friends at his house on Saturday. I'm not guessing. I know. Okay. And I told you, I know this. Okay. So that's a fact. So he's pretty freaking good, right? So he's saying the upside is 4,200, the downside is 3,600. Those are the levels. He said, if he doesn't go data dependent, we're going to go right to 3,600. Okay. So now that he is data dependent, I think the range is somewhere between, give or take 300 S&P points either side of 4,000. Okay. Maybe 200 up and 300 down, that kind of thing. I think that's the new way we're going to look at things. I think that, Kramer's a schmuck. But Gunlack, he's the bond king for a reason, okay? And if he's saying he's not behind the curve, then I'm saying he's not behind the curve because he's a lot better at that than I am. And basically, Tepper is basically, if you read between the lines, is saying the same damn thing. This is really important, guys, okay? So if you're sitting here hoping for lower prices, that the market gets smashed and we get this great opportunity, the only way that's going to happen, guys, is if China invades Taiwan and we go down to like 3,000 or something, whatever the hell we're going to go. Okay, but the big bugaboo, I think, is gone for the moment anyway, unless something changes. And I don't know what that something is going to be other than that geopolitical event. All right, so I think we're going to start to see a waning of volatility, and we'll see what happens from there. All right. So, I'm thinking of doing, selling premium, going into the selling premium business. But, that's where my head's at. All right. So that's the banks and the Fed. I think that's really important stuff, guys. I don't know what you guys think, but that's where my head's at. So that's that. China, what's his name? Biden's talking to Xi this morning. And Taiwan is saying they have seen a unidentified drone flying over their territory this morning. So that's that geopolitical event that I'm worried about. Okay, we should all be worried about. That's China, crypto, who cares? Oil, who cares? Mr. Market, who cares? This is all about, listen, at the end of the day, stocks move in conjunction with interest rates. It's the bond market and equities fighting for your investment dollars, right? And so if rates can kind of hang out at 2.5%, you want to lock in 2.5% or 3% for 10 years? I don't. I can make 3% in a freaking month. Why would I put my money in the bond market at 3%? I have to have no faith in myself. Now, that stagflation that you guys are asking about, well, that's a possibility, okay? And I think that's a very real possibility in the, short to midterm for sure. And I think it's not going to be easy getting high GDP growth. And I don't think the Fed wants high GDP growth because with high GDP growth generally comes inflation. So I think stagflation and a mild recession is probably their base